And then they went and drilled this hole, and they just hit this extraordinary grade. I remember just sitting there looking at it in the morning and being like, oh my God, I think I just watched $5 billion get created in a company that's trading for hundreds of millions.
And I think we've got to keep this intro very short because the conversation is worthy of every minute that the Money Miners listen to here. But we're speaking with Darren McLean of Muddy Waters. People might think of Muddy Waters as this activist kind of short seller.
Got a reputation,
Got a reputation. Darren, he runs a long fund these days. He came from K2 asset management, a hedge fund where he had tremendous success.
Yeah, spent 9 years there, right, cutting his teeth, ran the sort of mining sleeve. And I think for anyone that is interested, which I'm sure there's a lot of people out there in just investing in the mining sector, in particular those companies at the early stage, all the way through to seeing these projects get built, they're going to love this conversation. There are so many nuggets of wisdom. There's so much sort of experience that he's built up over his career. I'm thrilled to share this conversation with Darren.
Darren McLean from Muddy Waters. We're hoping that the waters clear up and we can have a pretty enlightening conversation about investing in the mining sector today with you. Thank you so much for joining us.
Thanks for having me, guys. Appreciate it.
Darren, I'm super excited to have this conversation. Trav and I both listened to a conversation of yours a few months back, and yeah, it was pretty gripping. We were messaging each other afterwards saying, got to get this guy on the show. It was just sort of fascinating, the way you spoke about the sector, the way you found yourself investing in the natural resources world. So I want to start the conversation there. You're not from a technical background, but you spoke in that conversation we heard, and when we spoke on the phone a little while ago with real sort of technical capability and thrusting yourself into that junior end of the market. So how did it all kind of come about?
How did it all come about? I got the chance to work for some extraordinary people, I would say. Not really from a direct teaching perspective, like elements of that, but honestly, just people that let me just kind of chart my own path and do and follow my nose and kind of were like, hey, I think you're onto something. Go chase that down. And I just happened to work, and I've only ever prior to Muddy Waters worked for two different groups ever, and both of my previous bosses were I think pretty special people who gave me a lot of free reign and latitude, and let me chase down and kind of bury myself in things that I thought were compelling. And even if I couldn't really explain them, yeah, I worked for some great people who just kind of enabled me to work in an unstructured environment and emphasize that. So, I mean, that was fantastic. They were also both contrarians, which helped. And I think I'm wired that way by nature. And in doing so, you never know where to begin when you start working in any sector. And I'm a big believer that the vast majority of what you do is learned on the job. Like if you want to be an engineer or a doctor, sure, your education is pretty important. But in finance and business and anything like that, I mean, learned experience ends up dominating. And certainly mining, I think, is no exception to that. There's I think when people think about technical aspects of mining, they think, well, you need to have a technical background to reach technical conclusions. But the reality is, I mean, any given technical background in mining only covers a small area of the components that make a project work. And certainly they have almost nothing to do with capital markets. So at the end of the day, you need to pull together a range of skill sets, and you need to just have a general good set of instincts of what is and isn't relevant, what needs to be dug into, what you can take as a given, what you can't, where mines, so many things need to come together for a mine to succeed and work. It only takes one thing to fail for a whole project to fall apart. And there's so many risk factors, and they're not necessarily readily obvious when you first look at a project and you say, oh, it's got millions of ounces. I saw this other thing. They look the same. It's great. That one's trading it here. This one's cheaper. I should buy this. It's cheap. And then you find out there's a weird species of something, or you have to divert a certain number of cubic meters of water flow a year. And that's just screws you for permitting timelines and pushes you into X. And I think knowing where the risk factors lie, having a good nose for the instincts of that, and yeah, just the ability to dig into that and bring together a bunch of disciplines from understanding how to get confidence in metallurgy, how to get confidence in a resource, how to get confidence in the engineering aspects, how to get confidence in the earthworks, and whether you can take that as a given, and just having a good nose for risk and joint probability. Um, these are kind of, I don't feel like I'm doing a great job of answering the question, but I would say that I don't think there's any one technical skill set that really necessarily endows you with a foundation to go out and do it. Yeah, I think there's probably like 10 things you need to pull together, and you can only really get an academic education in one of them. So,
Yeah,
um,
it sounds like
yeah,
curiosity is the thing you just sort of follow, and it was something that sort of gripped you and interested you from pretty early on.
curiosity is the word. Yeah, curiosity is the word, and tinkering. You gotta love to tinker. Um, but it's a contrarian's industry too. You have to be a creature of your own convictions.
Can you
So,
peel into that bit? I mean, I'm just kind of keen to hear you like your synopsis or your opinion of how do you make money investing in the sector?
um, how do I make money? How do you make like how do you
Yeah.
make money in a general sense? Like how should you make money if like to
How,
anybody, or how do I specifically
how
make money?
like how you as maybe like a non-technical outsider who's become a very like a skilled investor with success, like what's your synopsis of now your learned method if you were like writing a book? How do you make money in the sector?
Well, when I started out, I worked for this fellow Glenn Brown, who had this shop called Boswell Capital, and um, he's Glenn's a genius. He's brilliant, uh, and he's into deposits and discoveries and exploration, and he's a geologist and loves having complex theories of how a project will come together or how exploration will come together, or so on and so forth. And I sat in his basement of his office and just plotted drill holes. I read every single drill hole news release that came out in the market every single day and tried to figure out if they were interesting or not. And that I did that. I spent the first hour or two of my morning every single day doing that. And I did that for years. And in doing so, you plot things out, and a lot of it leads to nothing. And then every so often, like something will come by and it will just knock you off your chair, and you'll be like, "Oh my God, this is different." So just doing that over and over and over, um, and how to take a drill hole and make sense of what it's worth isn't there's no book on that. It's something you have to just kind of do and immerse yourself in, and I did that, and I thought there were probably people all over who just did that. And then I kind of quickly realized that that wasn't the case. I had a hard time finding anybody who did that. And we talked about exploration projects, and people would ask me about them, and I'd go into all this minutia and detail because I was obsessed with this stuff. And then I realized everyone's eyes were glazing back in their head, and I was like, oh, um, they don't really. This isn't what they do. But at the same time, in doing so, I found like incredible pieces of value and alpha, where you start spotting some things and uncovering some things that you think are worth extraordinary amounts of money. And the thing about drilling is the ultimate catalyst. Like a drill hole comes in and walks into a company that might be tens of millions of dollars and hundreds of millions of dollars, and sometimes it changes the value proposition by hundreds of millions to billions of dollars in a moment. And and when you watch that happen, and sometimes the stock barely responds, and you're like, no, that has to be worth $500 million or something like that. And it doesn't respond, and then you see it play out, and you were right from the beginning, and you say, "Oh my god, that was just sitting there hanging there." Like, that was an extremely compelling thing for me, was watching those pieces of information come in, realizing not everyone was, or very few people were doing that, and then watching them come to fruition, to the positive, to the negative, and realizing, "Oh my god, there was an incredible opportunity to make money there." So I watched a number of those instances go by early in my career, where I understood the scenarios intimately, and I understood the value propositions early, and I realized, no, there's a real edge here, and there's a real transaction opportunity. And I always say to people, who are starting out, that I've worked with, like the first time you see something you extraordinary, you probably won't believe it, and you won't trust yourself, and you won't have the confidence to make enough money on it. And if you do, you're probably, maybe you got a case of Dunning-Kruger where you're emboldened by your own naivety, but um, you're timid at first. You're like, no, it can't be this obvious. And you watch it play out. And the second time, you need to swing. If you see it, you need to move. And so I had a lot of reps of first times in that kind of job. And then I got the opportunity when I went to K2 to transact on a number of those. And yeah.
Do you think the opportunity out there has gotten bigger over the sort of 15-ish years of your career, as in less funds doing and competing in that arena?
Well, I'd say it's a simple question. It's a very multifaceted answer. Um, has it gotten easier? From a competition standpoint, yes. I think mutual funds have been, but they were a very traditional source of capital and walked in. They were big players. You had these big funds with very large capital sleeves, and I think the people directing them had a lot more reign and flexibility in how they could pursue things. And then I think they've been regulated and restricted more and more. They've been forced up cap. They've been forced to minimum liquidity requirements, minimum deployment requirements. They're kind of forced into pro-cyclical vehicles. It'd be a tough place to operate, at least for how I like to invest. I think it'd be extremely difficult from where the managers of those funds sit and what their restrictions are. So that's really removed a lot of that capital out of the sector, and where it exists, it's being largely pooled up cap into quasi-index funds. Um, and then active capital, yeah, honestly, I remember reading something not that long ago outlining that mining was one of the least allocated sectors in finance for active capital, and sitting there and just being like, oh my God, it's one of the most attractive as far as I can tell in terms of value creation and catalysts and ability to get an edge. So yeah, your competition I think is certainly reduced. A lot of the brilliant activity in driving deposits forward, which is what I focus on, has always been driven by special characters, ultra high net worth people, these dogged, talented individuals who take extreme risks with their own personal capital. Those individuals are aging, and they haven't been. There's been some rising new stars to kind of take their place, or who are showing nascency could turn into them, but there hasn't been a proper replacement mechanism. Like they're aging far faster than they're getting replaced. So their capital is inherently on its way out from the previous generation. Um, yeah, which leaves a big vacuum in terms of that. But at the same time, the industry has attracted less capital. It's drilled a lot less. It's been the driest decade, I think, no, in for discoveries. And so the opportunity set has inherently been smaller. So it's been a smaller opportunity set. But there's been less competition. When there's less competition, the opportunity for yourself, yeah, it's great. It's more compelling. At the same time, when there's less capital getting allocated, the difficulty of driving that opportunity to fruition can be higher. It can take longer. Maybe the money doesn't come in. You know, you can be right about something, and the money may not show up a week. It might be years you're driving it forward before it crosses a threshold and the market wakes up to uh, with the value that's there through some forcing mechanism. So I think the forcing mechanism would have come faster if there was more active capital, um, which is a long way of saying, yeah, the opportunities I think are greater. You have more time, requires more intestinal fortitude.
Tell me about follower capital.
In what sense?
It's a phrase you mentioned in your last interview, but I was just keen to tease what it means to you, like your observation of follower capital in the sector.
Oh, yeah. Well, I can remember the context which I would have said it in. I can only guess. I mean, the reality is, I think most of the money in this sector right now, I don't think there's a huge market, and there never really has been, of people independently going out and qualifying assets and trying to rip them down to the nuts and bolts and figuring out which ones work, which ones won't work, assets that have failed, really understanding in a detailed postmortem as to why they failed, what really happened versus what the narrative was in the market. And I've generally found if you do that, there's some very, very powerful relationships in terms of things that have worked, things that haven't worked, outcomes for assets in certain tiers versus other tiers. And I just don't think there's a big breadth of capital out there approaching the market that way. I think predominantly what they do is they look for They look for plays, they look for stock plays, they look for capital market plays, they look for things that are working. It's like, you get a hot deal market, deals are working. People start playing deals. Deals start going 4x oversubscribed. They start padding their orders because they tend to, they're everyone's structuring deals as free trade. You're free trading in 7 days, and for the last 8 that have gone off, oh my God, they've all had liquidity 10%, 20% higher. And so money says deals are working. They plow into deals. I think a lot of it's market activity is just oriented around that. I don't think people are going and funding companies on who's deserving of capital. I think they're just it's a lot of FOMO and event driven, and then on companies, what I've kind of witnessed in my time, and this is just my perception, is that people have become a lot more gun shy in financing small companies, venture companies, exploration companies, and rightfully so. I mean, it's extremely risky, but there used to be a sense that there was money coming behind you. And I think people generally, when they invest in the sector, they want to feel like money's coming behind them. And when they feel that, that's when they feel the most emboldened to invest. And honestly, that's predominantly the most important factor as to why people invest. Um, but when the checks slowed down and the market activity slowed down, uh, that feeling went away. I think that there'd been enough kind of false starts and pulses of excitement that then washed out, that left people kind of gun shy and worried about getting into these things and getting trapped in moments of illiquidity and not being able to get out. I think people are inherently terrified when they write a check to a company. They don't want to be one of the bigger checks usually. They want to be in the book in a medium size. It's not on them. Like they don't want to end up in a situation where they get a phone call and they say, hey, listen, we got 3 million in the till. We need to keep drilling. Yeah, this year wasn't a success, really. We had some good prospects, but like we need to raise 10 and we need you to be the lead. By the way, if you're not the lead, it's going to be tough. And that could really be bad for your investment. So, that's the situation they're scared of, where it could fall on them and they're in too deep to get out. And so I think generally what you've seen and what I've seen over the last like 3 to 5 years is money wants to tuck in between individuals they perceive as very strong. They want individuals they view as strong to anoint assets for them. Deep pocketed individuals, like you've seen enormous amount of capital pile in behind like the Lundin family and Pierre Lassonde, individuals like that. I mean, Eric Sprott is just, you know, I'd say he's the ultimate gunslinger in the sector still. He still writes big checks, but a lot of retail money and institutional money wants to slot in behind him because they know all those individuals have deep pockets, have deep convictions, and they follow their money. And so there's no question that the companies will run out of gas before they can reach the next gas station. Um, and and so I just think that honestly drives most market activity. And those are the companies that had been able to attract capital. Now things have picked up a bit recently. Money's been flowing again. But I think I found that generally speaking, you want guys and they want to say, well, they're behind it. They believe in it. So the project must be good. They're going to push it forward. They're going to keep financing it. They're not keen on down rounds. And they've got the money to try to, keep financing these companies, these projects higher. We feel safe. Somewhere we can park, we can slot in. It's not going to fall on us. And I'm pretty confident that this big, strong, leader is going to carry me to the promised land. And I think that's driven most of the market activity and capital allocation in the sector.
That
So,
speaks. Yeah,
yeah,
does that speak to like the whole concept of funding certainty as being like a massive um, de-risking like thing for just owning the equity, because the junior mining company is definitely fighting dilution their entire way. Funding certainty, reduces that race to a degree. If you've got a big backer who will kind of underwrite a check when things get tough.
yeah, yeah. I mean, cost of capital is kind of everything. Certainty of cost of capital is kind of everything. Well, it's not kind of everything, but it's it sure is important. And I don't think a lot of people feel like they have the strength and the wherewithal to drive these things forward themselves. And so they're looking to tuck in behind people who do feel that way.
Darren, I want to really sort of hone in on the part of the Lassonde curve that you find the sweet spot, if you like. So I think one of the things that really stuck out from that conversation was that the re-rate potential from execution is underrated in a sense. And I think you might have said
Mhm.
that, you can see a decent sort of a 3x there. And it's kind of interesting because we speak with a lot of people here, and that is really the part where they might run away from the stock, that construction hell where things can only go wrong. But am I right in thinking about the area of the market you like to play as the project underappreciated, whatever stage it might be? You come in there and then you like to see it all the way through until the project is built, or how else would you sort of describe that phase you love to play in?
Yeah, in a general sense, I like single asset companies usually. I like because there's more exposure to the area of alpha that I see. I like things that are underappreciated. I like things that um, people view as a bit of maybe a haunted house. Like there's something wrong with the company. And people have been burned once there and they don't want to go back, but something's changed. And that's the perfect scenario. And you're like, well, I know why people don't want to look at this. I didn't even want to look at this. But now that I've looked at it, oh my God. And this isn't the same thing as before. And I know why people are writing it off. It makes complete sense, but like something's changed here. And it's also, hey, in a perfect world too, it's of the size and nature that I can walk in the door and I can change it. I can change the situation. So I can materially improve some of the things that are holding the company back. That's the ultimate situation. It's not always like that. Sometimes there's not a single thing I can do about it, but my God, is it just, something special's gone on here. And I think when I look back actually at all my, it's funny, I worked at my previous firm for 9 years. I spent probably six of those just driving the mining side of things. But no, maybe 7 years. But when I think back to it, and then at my time at Muddy Waters now, in these years, like it's really been dominated by like maybe 5 to 8 files. I would just hazard a guess, and pretty much every single one of those was something that met that criteria. It was kind of a haunted house to people. Like I remember Michael O'Keefe, one of the most brilliant individuals I ever met. He's an Australian.
Yeah.
Yep.
Uh, came into my office at K2, and I took a meeting with him. I didn't want to take the meeting. I didn't care. He had this Bloom Lake asset, this company Champion Iron Ore, and I didn't know who this guy was. I remember him and David Cataford walking in my office with this fellow John Rathwell at TD, taking them around. Three just absolute wonderful individuals who I think the world of now. Didn't know any of them at the time, and I just took the meeting because I wanted information on what was going on in the Labrador Trough. It's a globally significant export region in Canada. There's almost no capital markets opportunities, so there's not a lot of competing people trying to figure it out. So hey, you should probably keep a close eye. Maybe something will come out of that. And he starts talking to me about the project, and I'm like, ask a few questions. I'm thinking this is a $90 project and a $65, $90 cost project in a $60 to $65 price environment. Who cares? And I'm just like, yeah, what about yeah, the rail contract though, what you're paying there? And he's like, oh, I renegotiated that, got it $10 lower. And I'm like, oh, okay, well, if he says so, he probably did do that. Okay, fine. It's not a $90 asset, it's an $80 asset now. Cool, great. You know, good luck repaying your capital on that. And then the port's undersized though. You can't take Supermax vessels. You gotta ferry the material back and forth to fill the ship. Like it's a big problem. It kills you. He's like, oh no, fix that. I'm like, how do you fix that? Well, I built a new port, got a new port built. How'd you build a new port? Like that's hundreds of millions of dollars. Well, I got the government to build it. Or it was something to that effect. I'm like, well, who else is using it? Just me. What are you paying to use it? And the answer was basically nothing. And I'm like, well, what's your relationship with the government here? Well, they're one of the big shareholders and we structured it. He starts going off in how we structured it. And I'm like, oh, that probably knocks off 10 to $15 a ton. Oh, okay. Now we're getting close. And then you're like, yeah, the recoveries though, they couldn't get that. Oh, I'll fix that. How'd you fix that? Like, oh, they're using mineral sand spirals. We just used the right ones. They actually had them sitting in the mill. We just moved them over. And I'm like, okay, and that really works. How do I know that? And he's like, because I'm getting those recoveries right now. And I'm like, and then as he started to talk more, I just kind of I shut my mouth because I couldn't believe what I was hearing. And I was just thinking there, I'm like, oh my God, what have you pulled off here? Like, this is a very complicated, like this would have taken, you must be, this guy must, I realized I was sitting across from a very impressive individual and a very determined, like guy who you just kind of, you can't keep down. He just gets back up no matter what he hits, he takes kind of guy. And I was like, and I just didn't say like much of a word for the rest of the meeting. I remember just sitting there absolutely floored. And I walked out of that meeting, and then Michael told me after that he mentioned to John, he's like, oh, that guy didn't care about anything I had to say. And I walked out of that meeting. I went to my business partner at the time, and I'm like, that was either the greatest liar that ever walked into my office, or that was the best meeting I ever had. And got on a plane, flew right up the site, went there, and I get there, and there's like one other person in the site visit. No one cares. And I'm standing there on the port watching this vessel get loaded. And I'm just sitting there. I'm like, I think this guy's making like 30, $40 million a quarter right now. Like, oh my God. And but no one wanted to look at it for the same reason I didn't want to look at it. Who cares about Bloom? Like, the thing had blown up Consolidated Thompson and like wrecked Cleveland Cliffs. Like this thing was everyone knew that asset couldn't work in this price environment. And yeah, I couldn't believe what I was seeing. So I mean, that's one example. It was very obvious why no one wanted to look. I feels like a bit of a fluke that I actually ended up taking that meeting because I didn't want it really for any interest in the company. And that was one of the greatest feats I ever saw anyone pull off in the sector, to be honest. So
That's incredible. Yeah. I mean, O'Keefe had run Glencore Australia and then sold Riversdale to Rio. But credit to you as well,
mhm.
because that would have been like 16 or 2017 in the depths of the iron ore bear market where everyone was scared to go. So even taking the meeting and thinking about investing in iron ore was a bit of a contrarian sort of play on your part there as well, I'm assuming.
uh, uh, a bit. I think it was more of a thing that the Labrador Trough is something you should watch if you can have relationships with people and garner information on what's going on in the Labrador Trough, which is largely held inside companies that it's not primary assets and it's not a lot of reporting on, you should know it because something special could come out of there. And it made sense. There could be a lot of value at some point. There's so much infrastructure, so many projects and deposits. You should watch it and try to gather as much as you can because you never know. If something did happen, it could be special. And that was really it. I just didn't think for a minute this meeting would be that, but it was. So it was just, I think I would probably credit myself for the instinct that I should continue to care and watch that. And I've also just been of the mindset that iron ore was always one of the most fascinating metals to me because I walked into my career and I think it was like it had just been in like the hundreds, and then it had collapsed down to 35 for a moment, being like 50. And I'm, reading all these reports coming out from like, I think it was Goldman's and other groups talking about iron ore is never coming back. We never see like 50 above $50 a ton again. It was dead. And as long as I've been in mining, iron ore has been priced in backwardation. Like the forward curve goes down always. And listen, I'm not like a super macro guy, but I'm like, I don't know, man. It feels like in a growing world, like the whole economy is predicated on the world growing and expanding, really. I mean, if it starts shrinking, you got big problems. Uh, hope you've got some really fancy insurance policies, but uh, steel seems like something that probably shouldn't go down forever. I don't know. Seems like a good thing to buy when others are pessimistic and you're kind of up against the cost curve. But people thought that BO and RHP were just going to print the metal into oblivion and forever. Now, it's funny because that prediction's being dead wrong. Iron ore has just continued to rise pretty much my whole career. And yet the backwardation had always persisted. The pessimism had always been like maintained. And for some reason, all these banks had maintained their confidence that you should be pessimistic on iron ore and you should price it cynically. It didn't seem to matter how many times in a row they were wrong. And I'm like, well, that's easy, Alpha. I mean, all I have to all I have to believe is that like they don't know what the heck they're talking about. That's it. And the world's more complicated and they're probably a bit emboldened. Uh, I never listen, I never care for what anyone has to say on macro and their convicted beliefs on the world if they can't prove to me they can solve individual companies to a great degree of alpha. Man, if you can't find alpha in individual companies to an exceptional degree, good luck solving the world. Like the number of pairwise combinations are insane. So whenever, I always think that's an opportunity in commodities, and I always think iron ore is fascinating for that. So that's why I wanted to watch it, and that's why I wanted to watch the trough.
So
But it led to something, thankfully.
I'm guessing Champion Iron was one of the 5 files that has mattered a lot in your history. I can't let you go without telling me about another one.
Yeah, I think it is absolutely. And it is one of them. It was one of the most impactful. I thought it was brilliant. I think it was one of the most brilliant things I saw pulled off in terms of an individual achievement. Not to put it all in Michael. I mean, I think David Cataford's an exceptional individual there as well. I think the two of them are a great team. But I think the world of both those guys, and yeah, that had a big impact on me. And it's also just turned into important relationships. So, but there's been lots. Yeah, that's one of the 5 to 10, let's call it.
And another one would be
Uh GT Gold
yeah, yeah,
was a big one. Filo was a very big one.
yeah,
Actually, those two kind of like went end to end in this kind of fortuitous fashion because I sold GT Gold, um, signed the voting support agreement and the sale to Newmont. I think the transaction closed, and then we were sitting flush with a lot of money, and I was probably in close to a 50% cash position at that point, and thinking, my God, what am I going to do with this? What am I going to find to deploy this into? And then I watched Filo drill this exceptional hole up in the Vicuna district, and both of those were situations that I thought were heavily misunderstood. Um, and they're similar to Champion, I guess, in their own respects, in that sense that people didn't want to look at them for a reason. And actually, they combine and they connect. So GT was a discovery up in BC in the Golden Triangle. This geologist, Charlie Gregg, had gone and done some brilliant work. He found this epithermal gold system, very high grade, extremely discontinuous. There's no structure to it, but the grades had built a market cap and people had gotten excited. But it's kind of a vein swarm. You just had to mine the whole cloud and take the average of the whole distribution. So even though there was all this 5 gram hits, really, you just had to mine the whole thing, and probably it's going to be like a gram and a half. And I think when the market realized that, it collapsed. So I had this big run up and then this big collapse, and people felt like I think they'd been, I don't know. The reality is when a stock falls, people like to blame a lot of things or complain, but um, I wasn't there for that part. Instead, I watched this drill hole. It was like TTD 085 get drilled in, I believe it was 2018, like September of 2018. And they hit like 500 meters, and it was a wall of copper gold, like just completely continuous for half a kilometer. It was like zero 0.8 or something like that. But then it had some like higher grade zones in the middle. And I was like, oh my God. And then immediately started mapping out the topography and looking at it and being like, yeah, okay, yeah, there's you got red Chris across the street, which looks like an analog in the same system, like the ratios of gold to copper. It's the first hole in, and you're like, so Charlie had gone and found the epithermal system. And then people are always like, wow, there has to be a porphyry nearby, and they usually don't find it, or it's not there, or it sucks. And Charlie went, then immediately next program found the porphyry, like first try. It was incredible, and so he deserves all the credit in the world for that. And it was one of the best discoveries I felt like I'd seen, and the stock didn't move. I think they were still holding some residual market cap from the previous discovery, which is kind of too bad because it would have been a lot more extraordinary explosive if it had just been sitting as like a $10 million company, but it was like a 50, 60. And then maybe added like $10 million in market cap on that. And they did financing after that hole came out. And I think I was the biggest order in it. And I was like, oh my God, everyone's going to be clamoring to get in. And it was kind of like, you can have whatever you want. And I'm like, what? And then after, I'm like looking at this, and I'm just like buying every share I can. I'm trying to buy as much as I can without running the price up. For like a month or so straight, it's just me on the board. I'm just buying, 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 buying. And I'm like, what is going on? And then start calling around, just like, hey, what do you guys think? Ever heard of GT? And you get the feedback. Oh yeah, yeah, no, we've seen splashy holes like this before from GT. I'm like, I realized that it was kind of a haunted house to people. They've been burned by the epithermal system. I don't even think they realized what they'd really hit here. And so I was just kept buying it up, and then offered to finance it. I said, listen, I think what you should do is, the market doesn't recognize the value of this. Well, sorry, actually, I'll compress the story. They hit a second hole. The second hole was even better than the first. It was extraordinary. The stock finally ripped. People got excited. But then the company started arm waving that there was a third step out, and the alteration looked just like the first two. And the market was like, oh, they hit. Oh my God, this thing's going to be like this big. And that means like this is gone. And so the whole market had gotten that in their head, and they're buying with the excitement of that. And then the holes came. And the hole actually did hit. It just didn't hit anything close to what the previous two did. And so I think people felt like they had been misled or lied to, and the stock, which had gone from like 60 cents after post, it'd been like 50 to 60 before the big discovery hole, went up to like 65, 70, maybe 80 after, screamed up to like 220. And then when the hole came out, like collapsed down to below where I'd been buying up the stock, or around the same level, as if no value had been added. By this point, like no market cap had been added to the company from this discovery. Except the thing about that was, the market wasn't looking at this thing and modeling the deposit, trying to figure out what it would take for this to be a mine and actually be meaningful. They were just saying, I've been told the next hole's good. Next hole bad. Oh no, that bad. I sell. And they sold it all out. And we looked at it and we're like, I wasn't looking for, I thought the threshold it needed for that to become like clearly a mine was, it just needed to show the mineralization extended a certain distance. And so it showed continuity, even if it was bleeding out. There's some strength to the system a certain distance. I could, what that meant for the shape that I could assume existed would be enough, and that would be critical mass. And I got what I was looking for. And the market thought it was the worst news ever, and they dumped it. And they started drilling these surface holes, and it looked like it might come to surface. And I remember they put out further holes and going. I remember telling one really influential person in the industry, sitting there walking him through it. He's like, "You really think this is a mine, Darren?" I'm like, "I think this is two drill holes away from being a mine, and I think they're probably going to hit. I can't be sure, but I think this is two drill holes from a mine, and I'm paying zero for that in the market." Like, and so the drill holes came, and they were way better than what I was hoping for, showing this thing was tracking the surface, and the stock continued to go down, continued to sell down. No one cared. And I was sitting there, and I went out. This is actually funny because I had met Muddy Waters through an activist short selling campaign I ran on a company called Asanko Gold, and they had joined in on that. And this is shortly after we had closed out and completed that trade, which had been a really big success. And they had, kept asking, "What else is there? What else?" And I'm like, "Well, like I don't run around looking for short selling ideas in mining. I look for, the alpha and the opportunities on the asymmetric to the upside. Like that's what you're looking for." And I'm looking at this company, GT Gold. So, I start walking through it. They ask questions. I'm like, sure. I mean, I'll show you why I think it's amazing. I map it out. I show the volumes. I show like the topography. I show the different ways you can mine it. I show like the infrastructure, what I think the capital costs will be, what you can reasonably infer the metallurgy will be from the district, kind of your range, and costs with the so on and so forth, and what I think will be the economics of the project. And I'm like, yeah, I think this is the first thing I've seen in greenfields that's going to sell to a major in copper in a long time, like 5 years or so. I think this is gonna go to a big boy. And then I talked to them after, and they've been buying. And it's like, you guys are buying long in your fund, like in junior mining. Are you sure that's like, are your LPs okay with it? Kind of thing. But um, for them it was like a small little position. And but then as it grew, and as the drilling came in, and the deposit got proven out, the metallurgy came in, the conviction came in, like yeah, they ended up really partnering in the sense that they came in and bought a lot and shared a similar mindset and were convicted on the same belief that I held over at K2 um, and ended up selling to Newmont for close to 500 million. And it was the first sale of a copper project to a major in a long time. It ended up being exactly what we thought. I remember getting a call after from someone saying, "Hey, Darren, like I got to ask you, I got a call from some fairly well-known person, a talking head in the industry, who'd been really negative on the project, saying all the reasons why it sucked, which I didn't understand, but we're just all you needed to do was use a protractor, and you could see they were wrong." Um, and I had heard a rumor that you had basically extorted Newmont into blackmailed them into buying the company and threatened to short their stock or something or publish on them if they didn't buy you. I'm like, I mean, listen, man, that guy, that is like, I'm not that cool. I mean, if you want to tell people that story, I'm okay with that being my the myth of me, but no, that's not it. Yeah, it was just a good project. But yeah, GT was like that, and then we sold. It's at one point we'd gone to uh if Lucas Lundin or my brother had reached out to him to see if he wanted to invest in the company, and he had come back with some pretty strong interest as he had walked through the technical aspects in our work on the project. And it didn't end up coming to fruition, which ended up leading to a lot of the tension, I think, between ourselves and the chairman, which obviously came to head in the proxy matter. But you know, not to dig that stuff back up. It was a big success for us, and I guess it was a big success for him in the end too. But the investment didn't come to fruition, but I took a meeting with him at a conference and this company Filo he had, and I remember going through it and just kind of like sitting in the meeting, learning about it for the first time, and kind of being like, Jesus, this is one of the best projects in the world. Like it's obvious. And I just laughing. I'm like what I can say is you're not being priced. What's obvious is like this is clearly one of the best copper deposits in the world. And what's also obvious is you're not being priced by the market. This is not really you're trading on, relative levels of apathy. You're just floating at neutral buoyancy effectively on the market's apathy because it's in Argentina, it's on the Andes, it's right up against the border between Argentina and Chile. Trying to get to something where you can develop a project there and trying to get the Argentinian and the Chilean government at a point where they're both willing to work together and transact and agree to unlock something is kind of like waiting for the solar eclipse, or lunar eclipse, and you're like, what a real difficult capital markets proposition, what an incredible discovery. I didn't really buy it for that reason, but I thought it was a brilliant project. And then they went, and shortly after I'd sold GT, they drilled this hole and they just hit this extraordinary grade. And I remember just sitting there looking at it in the morning and being like, oh my God. And then thinking about it and being like, I think I just watched like $5 billion get created in a company that's trading for hundreds of millions, and being like, this is the greatest discovery I've seen in my life. The frequency with which you'll see a discovery of this magnitude, like this is different now. This isn't like the world needs this project now. And when the world needs the project, you get these monster things that can be at the like Grasberg. Like these things come forward because they're just too powerful. And I thought I'd watch an asset cross that threshold. And I was watching BHP and Rio Tinto cash flow, like the market cap of this company, like every week. And being like, this is a crown, like these companies are built off a couple copper projects where they have a fractional ownership of something that looks like this. And that makes up BHP's like copper division, like 50% ownerships in like a couple of these. Like the largest copper mining companies on earth have like 3 crown jewels, fractional pieces of them. And this can be one of their penultimate crown jewels in their crown and can re-cement it for like 200 years. That's how long this thing will chug for. Can you afford to take the risk of a week's cash flow if you're BHP or Rio? Like, well, you can't afford not to. You get one of these like once every 20 years. Like you have to move. It costs you nothing to plant your flag. And I thought that one of them would move. And it's such a freak that you get a discovery like that in the strongest hands in the sector. What always happens is like because there's so much randomness in discovery, the frequency with which you get a brilliant discovery in hands commensurate to handle it without conflict, without stealing, without corruption and things like that happens once this object of immense value forms in the middle of nothing in a ragtag group of individuals. To see that happen in the hands of like the Lundin family, and was like, oh my God, I'm going to see this once in my career maybe. And if I can't move on this, then like I don't deserve a job. And so I just said like, screw it. Like, I got no choice. You just got to go. And so we plowed in, just plowed in, and um, ended up making about as much money as we made in multiple years of dragging GT forward in a matter of moments, which is the funny thing, in a matter of months, and not needing to do anything or have much of an active role. Um, but BHP soon came in and invested, probably like a double from where we bought in that day. But the reality is the stock went $5 billion or $3 billion, whatever it is you think it's worth. This was a discovery that was worth, the MPV was so high, the outcome of the company was going to have nothing to do with the MPV. It was just a function of leverage, because like you can't get someone to pay NAV for something that's probably got like a $20 billion MPV. It doesn't happen, right? So, but you watch that much value get created in a small company, it can't cover the gap instantly. It just can't go from like hundreds of millions to 3 billion, 4 billion in a moment. It's a very slow grind. That was the first thing. I had always dreamed of like a Voisey's Bay moment, like these things that we haven't had in the market since then. These things are just worth so much, and everyone comes in, and it takes so long because they can't get there because it takes so much capital to take them to their ultimate valuation. Everyone makes so much money, and everyone's in on it. Like one of those things can seed a bull market on its own for how much capital gets redeployed on its tail. And there hasn't been those. There haven't been those like supernova tier ones. And I thought Filo was kind of potentially in that caliber, except it's funnily enough, it was so tightly held that not many people made money on it. But other than the Lundin family and BHP and their largest shareholder, and one other fund who was in there very early before the discovery. But yeah, it was incredible to watch. But it was in Argentina, and there was a perception that it was hard. And so, there's two things. One, people just thought Argentina is too hard. I just didn't think that mattered when you had a deposit of that caliber. I thought it almost didn't matter where it was. I mean, like, it's like when Kamoa-Kakula got discovered in the middle of the DRC. Yeah, the middle of the DRC is brutal, but not when you've got Robert and Kamoa-Kakula. There's a guy who can handle, and there's a deposit that like needs to come forward. So it's just different when you see things like this. And yeah, it was yeah, that ended up being probably the biggest one of all. Obviously ended up getting sold to in a joint takeout between BHP and Lundin, and in the end, it ended the way we thought, for about what we thought it would sell for, and just a brilliant, brilliant discovery. So, yeah, I think when I look at investing in the sector and things like that, I played a lot of poker growing up. My brother and I did, and what we discussed is like in this sector, the way we invest, the type of things you invest in, you don't play ace 10 offsuit. You just don't. Like it's a violent sector. The consequence of losing the hand is immense. And you play pocket aces and pocket kings only. And you watch a lot of ace 10s and ace jacks go by, and you fold and fold and fold. And it hurts because you think it's a good opportunity. Sometimes they work out and you're like, oh, I should have played it, but you don't. You play pocket aces and pocket kings. You play hands that almost no matter what happens pre-flop, you have to enter the hand. You just have to enter the hand. Filo was one of those. GT was one of those. Champion was one of those. And there's, I've seen being a certain number of others. Can you lose the hand? Yeah, of course you can lose the hand. There's lots of ways you can get hurt. And my brother's boss made the comment once, I've never forgotten it. And he's like, you can be the best gunfighter on earth. You get in enough gunfights, you're getting tagged. That's just it. And that's the reality of investing, and especially in the sectors we invest in. But when you got pocket aces or pocket kings, it almost doesn't matter what happens. You still have to enter the hand and play and see the flop. So that's kind of yeah, I'm rambling a bit, but
That
That's
was
a wicked.
fantastic.
It's a wicked synopsis. It's a wicked synopsis, and it's like what you describe is these moments where you can see it, you're certain, and the market doesn't see it yet, and those are the circumstances that like lead to tremendous opportunity and tremendous monetary gain from investing.
Yeah, 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 absolutely.
Do you ever see that the other way around where the market is really excited, they think something is spectacular, but you don't?
Oh yeah. Oh yeah, all the time. Um, I think, one thing I like to talk about is like, uh, listen, I have a tendency to answer questions in roundabout ways, so I apologize. So I'm going to try to be more direct. Yes, I see it all the time. Uh, do I short those things? Yes. Do I always short those things? No. Are when I see those things, are those things, what percentage of the time are they a good short candidate? Less than 50, maybe 50. There's just a lot of things that need to come together for it makes sense to short something. I see a lot of things that I think are completely overblown or um, I don't want to use the F word, but let's just say not truthful. And I think you can't short it. It doesn't matter. People are never going to figure it out, and the guys running it are just too talented at talking and going and marketing and attracting like retail capital from whatever sector there is. And these guys are forces of nature, and you have to respect people's talents. You have to respect their toughness. You know, you don't get in fights that you're not extremely confident you're going to win. Just don't get in fights at all. It's probably a good strategy too. But um, I found I think in the start of my career, I was a bit more immature at the stuff. I thought I'm right, you're wrong. This is a scam, and therefore it should go down, and it would work that way. Um, I didn't start to be a short seller, but you just live in the sector and you rip things to pieces. You'll find there's a lot of scams, and then you'll watch them play out, and sometimes they blow up for the reasons you thought. And never do I see that happen and the market actually understand what happened. Actually that's been one of the most fascinating things is watching all the postmortems of the markets being like, it was tough. Yeah. It was just a challenging whatever, or they just got this thing wrong. And I heard this, and it becomes the narrative that goes around. Everyone repeats the groupthink or the statement they heard. Because most people gather their information on deposits just by talking to people and being information gatherers from conversations rather than going and reading tech reports and trying to break them down and solve the gaps in them and things like that. So, um, but losing my train of thought a bit, I suppose I see them all the time. For something to be short, it's tough. You need liquidity for one. Um, I don't think people understand how hard short selling is if you haven't done it. It's terrifying. Like I get scared in long positions, but every long position I enter has to meet one criteria. It has to be like, in what world can I not make this bet? But more importantly, in what world can I not get off this from where I'm buying it at the level I am buying it at, you know, like versus what I think it's worth and the number of different ways and outcomes and paths to fruition this can take, or to points where I can gain liquidity. Like how the heck do I lose money on this? And I really need to feel like that to ever go big in anything. And on the short side, you can always get hurt and hurt extremely badly, no matter how right you are. And the one thing that's interesting about mining is you can time it sometimes. And that's what made Asanko different. So I published a short selling report on Asanko Gold in 2016. Um, took a big risk in doing so, but I was positive. But what made Asanko different was it was liquid. Um, and I thought I could time it. So I could track it with satellites, it would give me elevation scans. I could rebuild their block model. So they had said that they had their previously, the previous guys hadn't drilled under the pit. There's no drilling data, but we had actually found the drilling data on the Wayback Machine by Internet Archives from like 10 years ago.
Wow.
It's like, so I took it and I replotted out, rebuilt the block model from it. And that was all the drilling they had that they'd used to build the block model. So I had the same data. And then I remodeled it. And I'm like, oh, this is ridiculous. There's like half the gold there. Actually, I thought it was less than half. I think I published half, but I thought it was maybe 40%. And there's clearly gonna, yeah. Anyways, but I could build my own block model. I could map out where they were mining. I could track the pit limits. I could fly satellites. I could scan it to 30 centimeters accuracy. And I knew every level of the mine, and I had my own block model, and I was seeing what was coming out of it versus what I thought would come out, which is a fraction of what they had. And I knew I was right, and I could predict the future on it. So I knew when the pit was going to close, and that was different. I could time it, and actually, I think that was one of the more impactful things that ended up getting Muddy Waters interested. So initially, they came in after I published on that, and they had questions about another company. And I'd done a ton of work in the other company. I said, yeah, it's a scam. Not a good short though. And explain why. Um, and I was like, we talked about Asanko a bit, and they're like, yeah, we don't really do mining though, and we're not really interested in it. Like, interesting report, like the work, but it's like debating the existence of God mining. It's my lying geologist versus your lying geologist. Great. And I'm like, yeah, the thing is, man, it's like when you short things, you're right, but maybe it's being propped up by a guy and you don't know when he's running out of liquidity. You can't tell. You'll be right eventually, or you believe that. The timing is tough. I was like, this is bound by the laws of physics, man. I can time this for you. I can show you what's going to happen at every stage of this. And, when we're going back down and walking him through it. And I think that had a pretty profound impact on him. And
Yeah.
so we did that, and it was remarkable accuracy. I think what we predicted, it was like, I was even shocked by how accurate it all ended up playing out towards our expectations. Um, that's what made that one doable, and it had obviously just become the market darling at the time. And so it was pretty liquid, and you could get a lot of borrow, and oftentimes you just literally there's not enough borrow available. You can't short things naked. I mean, people always talk about, oh, naked shorts. That's not a thing. You need to get borrow, and there's just often not there for a lot of things. And so it's pretty rare you get things that are overvalued and have liquidity and have borrow available. And even when they do, for it to be a good idea, like, man, you know, when you're down 50% on a long, it hurts. It really hurts. When you're down 50% on a short, oh my God, is it terrifying? Say you set out, you shorted 5 million bucks of something, you're trying to make 20%, you're trying to make $1 million. It fucking rips on you. All right. It goes up 50. Now you're down 2.5. You're trying to make 1 million, you're down 2.5. Okay. And you're like, oh, that's a tough one. And what do you do? You walk away, or you're like, no, I'm still right, or do you press it? Do you increase it? And it's like, well, if you hold on, I mean, you gotta make 3.5 just to get to where you wanted to get now. Like, that's a long way from where you are. That's a big percentage drop, and then, or you can just increase it. You can short more. Okay, so you short another 2.5 million. You shorted 5 before. Now you're down 50%. You short 2.5 million more. You're now short $10 million. And it goes another 50%. You just lose another $5 million. And suddenly you're like, I'm down $7.5 million. I set out trying to make $1 million. Oh my God. Like, what is happening here? Like, I've been there. It is terrifying. It is like the most stomach churning feeling on earth. So short selling is extremely difficult. Being right isn't enough on your thesis. It's, yeah, I can't explain to you the pain if that situation, you start with 5 trying to make 1 million, goes 50%, you add 2.5, goes another 50%. Usually when I'll short something is when I feel like, in what world can this double again? It has to satisfy that criteria. So you see something, you're like, I think that's worth like $100 million, man. And it goes to like $500 million. You're like, that's insane. I don't short it. I'm not going to put a big short on that. Like, can that go to $1 billion? Dude, I've seen guys promote like like a complete moose pasture up to a billion. Like, of course it can go to a billion. And they've got actually, there's something real there. It goes to 2 billion. You're like, oh my God. Like, but can it go to 4? I'm like, well, I've seen a lot of crazy pumps and critical minerals and things like that. And these assets that are never going to see the light of the day go to 4 billion before. So I guess in theory it can. Then it goes to 4 billion. And you're like, wow. Can it go to 8? You're like, probably not. Then it goes up even more. And you're like, goes to like 6. And you're like, okay, 12's different. Getting a company to $12 billion in mining is a different thing. Like you're talking like being a major now. Like that's not going to happen on this piece of junk. And at that point, it's like, okay, now I'll short it. But like you can't short it because you think it's overvalued or it's extremely overvalued. You got to be like, in what world could this ever possibly double again? Like ever? Like if that doubles again, it's going to compete with Kinross or something like that. And you get those opportunities. You just don't get them that often.
Short selling novices, they don't realize that their returns are path dependent. That if you short something at $10 and it does eventually go to zero, but it goes via 100, your losses are incredible.
Yeah. Again, it's just one of those. It's one of those pains you can't experience. You can't describe unless you've experienced it. So I never want to be back there ever again. And luckily, in that situation I'm talking about, where I'd been there, I came out ahead. But what a white knuckle ride! Yeah, I feel like maybe that was. Yeah, I definitely walked away saying never again. That's for sure.
Darren,
But
there's
no, I mean, short selling is not my focus. I mean, again, mining's asymmetric to the upside. You walk around looking for longs, occasionally stumble across shorts.
you said one other thing that I want to ask you about in this conversation, and that was that you've got this real ambition to actually run a mining company. And yeah, I want to hear you expand upon that. I know you've got involvement in a gold business already, but where does that stem from?
Yeah, I would love to. I'd love to. Um, where does it stem from? Uh, Listen, you use the word ambition. Does it stem from ambition? Yeah, to some extent it does. Is that the primary driver? No. Um, I think it stems from belief more than anything. I'll address the ambition aspect. Do I want to build a mine? Yeah, I mean, I found something early, um, become the predominant force in the market for it, the primary financiers and things, sold them, had them come to fruition that way. It's great. Shorted things publicly, obviously had those come to fruition. Um, have I, but building something feels like that's something obviously I haven't done. And when I look at assets, usually it's very rare you get something you're like, you need a lot of exits. You need to look at, anytime you go, okay, let me step it back 1 minute. When you invest in mining things, and you either need to be in small enough that you can get out in a hurry, or you can just get out relatively unscathed if you don't like what you see. Or you need to be in large enough that you can take control of the situation and change it if you don't like what you see. And the worst place to be in no man's land in the shooting zone, or is when you're in too big to have any influence over the company, or sorry, too small to have any influence over the company, but too big to get out. And I see a lot of guys end up in that situation, and stuck behind bad management and corrupt individuals and things like this, and complicit boards, um, and just frustrated, banging their heads against the wall, but in a relatively liquid situation and with no power. You can't be there. Um, so um, anytime you go into an investment, you need a lot of different outs. You need to say, okay, you need a bunch of if-then sequences that lead to success, and your worst case scenario is not that bad. You're like, yeah, I'll get hurt, but it's not going to be a mortal wound. So what I haven't really ever had before in a project was where I thought one of the outs was you just build your way. You can build your way forward. I couldn't build GT. No way I could handle that. Like, Filo, like, come on. I can't take on Filo. I mean, are you kidding me? Like, it's you need BHP to drive Ford Filo. But what I found is that when people execute on simple projects, it's the most amazing re-rate. I've never seen anyone execute on a fairly. It's funny. I've watched. I think I said earlier, if you really study things and you pull them apart, you start to see some very obvious relationships. And what ends up happening is the market doesn't ever do that. And some people do, but the market on mass, holistically, on average, does not do that. And so they don't really understand what assets sold, why they sold. Sometimes they think someone just extorted the world's largest gold mining company from his small desk into buying them. They think things like that. Um, and but when you really rip them apart and you understand the nuances and differences, you see things where it's like they occur with such extreme frequencies. I remember in GT looking at that and explaining to the company, it's like, listen, if I don't really want to say what the criteria is, but you know, give it away too much. But I was like,
Sorry to butt in here, but JD, I have to reveal something. We managed to squeeze this out of Darren post conversation. He wasn't willing to say it when we were talking, of course, but we had to pry him on what are these criteria that actually leads to a takeout within 2 years, and he told us one of them.
What was that, mate?
That
Reveal it.
that one thing was in their study that they do put out. Are they pricing things based on using Sandvik ground support?
It's so true, mate. You check the criteria to make sure you are a guaranteed takeover.
You got to use Sandvik ground support, mate.
Got to use the company that is at the forefront of R&D, the forefront of technology when it comes to ground support.
Don't believe it? Look at their Ursamix bolt, mate. This is a dynamic resin bolt. I'll let the man, Derek Hurd, explain it himself. How has ground support changed over like the last 20 years, for example?
Some people might say not much at the end of the day because it looks like a steel bolt or a splitty or a friction bolt, depends what you call it, sort of thing. But they've been around for forever and a day because they're a good product at the end of the day and they do their job. But there's been a lot of evolution on sort of the dynamic capability of products, that can hold more capacity, more energy. Again, as these conditions become more challenging, there's more requirements for, higher capacity products at the end of the day. The other thing that's probably changed over the years is the frequency of use. Probably ground support was almost an afterthought, 20, 30 years ago. Now it's critical as part of the development cycle, to provide that safe working environment.
How good is that, mate? The company at the forefront, the cutting edge of underground mining technology. Go Sandvik ground support.
Back to Darren.
if you look at every project I've ever seen in my career that satisfied this basic criteria set here and actually satisfied it wasn't like just a fake, phony resource scam pretending to be that. It was a real project. Because people talk about the Lassonde curve a lot, which I think is a heavily misunderstood thing. But it's like, do you know what the average life expectancy of one of those companies is post their first economic study? And the answer was a year before they got taken out. Whatever, whether it was a PEA, a PFS. Do you know what the longest survivor was of those companies? There was about 10. 2 years. None of them had made it longer than 2 years without being bought out. Not a single one. So people are like, oh, you get stuck in the doldrums of this. And you're like, no, you don't. Not if you're in a certain tier. And, I broke down all the tiers of assets to the company and why. And it was like you fit. You're not a tier one project, but you fit in this tier. And that tier is an interesting tier, and nothing in that tier has ever survived more than 2 years post study. GT didn't either. And that was a 100% hit rate across things. And every single one of those projects I outlined just had something about it that made your skin crawl, that every night you went to bed just terrified of that risk factor and you couldn't think about it and stop thinking about it. In the case of GT, it had a very obvious one. And I was terrified of it every single night I went to bed. And had it not been for that risk factor, I would never have sold it for $500 million. I mean, you would have played for billions on that project. But it had that. I don't want to say what it was, but that didn't mean it wasn't going to get taken out. And when I ranked like the risk factors and the soil your underpants factor scale of all those different assets all being taken out, I'm like, this is basically like second quartile risk. Like, we're not talking like active coup going on in the country. We're not talking about subordinated minority interest to a private Turkish conglomerate type of risk. So I when you look at projects, I guess where I'm going, and in development projects, I watched a perception form in my career that building mines was a really bad idea. And I've heard that from a lot of people I respect, and who, but I thought that opinion was falsely formed. I'm like, well, you think that because you watched all these companies try to build mines and blow up, but you don't understand they all blew up because they're all resource scams. They're all gold projects. And you don't understand that because I'd studied those projects and I'd shorted a lot of them because I thought they were resource scams. And it's just, we just went through a world where the gold price collapsed. No new discoveries were made. We had the driest decade. And the only projects getting pushed forward were not projects that were real. They were the projects where you could turn the knobs on the kriging or the interpolant and blow out the resource or fuck with the wireframes and just 2x 3x the actual resource, and then get the chain of custody of information is some guy. You just need one guy to go do a block model in a wireframe. It can be Joe Blow, it can be your buddy. Okay, he just needs to sign off. You do that, you get your resource, you pass it off to another group who then says, okay, well, I take that as a given now, and now I build you your mine plan, and here's your feasibility study, and your NPV is $2 billion. Amazing. It's not like there's multiple audits along the way. You just need to get Joe Blow to sign off. That's the most important thing. You do that, boom, you're good. And but the only things that went forward that looked like they were good enough to go forward only looked like they were good enough to go forward because someone had cranked the knobs on them. There weren't any real projects. And so you watch resource scam after resource scam get built and blow up for various reasons. And people are like, oh, destructive, building mines, terrible idea. And then they also came off a decade of excess where people were just blowing their brains out, with pro-cyclical mentality, buying, paying insane prices. And so, the industry was entering this period of austerity. And then the only thing they got for the sins that they had just incurred in the bull market of the early 2000s and culminating up to about, the 2010-ish time. And then you watch a bunch of scams get built only. And there's no price environment for real projects to go forward. And then, so that's what happened. That's where that mentality came from, in my understanding and my belief. And then I watched some guys try to forward some other projects. I did work on them. And I thought, I think that one's going to work. And not that I can make that full determination myself, but you get a sense for it. You're like, I don't see any problems with this. I don't see any obvious things where I see with it make my skin crawl and intend to hurt people. I don't see all the earthworks. I don't see all the redirecting water, dealing with mucky earth, saying you can move it for X dollars when it's straightforward projects, building straightforward. A lot of your CapEx is assembling a mill. Assembly doesn't go wrong. It's you can price it exactly and you just put it together and bolt it together on site. Things like that. And you're like, well, these are simple builds, simple projects, simple regions, good location for the tailings, good location for the mill, good infrastructure, good access to mining services, good workers, all the likes. And you're like, and they're doing it prudently. They're passing off the parts of the project that they shouldn't be taking on themselves. They're doing it to good counterparties. I have friends who are technical experts in various regions, call them for verification, get it. And you're like, I think that one's going to work. Watch them build it. You're like, yeah, it's not that interesting of a project, though. It doesn't have a big MPV, but they're going to build it. They'll make money. And they do it, and the thing just turns into this it ends up selling or trading for 2-3x what it's worth. And you're like, oh my God. People plow in. They think it's the greatest thing they've ever seen. You're like, my God, these guys are rock stars, the greatest technical team ever, because they built a mine and didn't screw it up when everyone else did. And I'm not saying they don't deserve that reputation. A lot of these people I think are amazing, but they stayed within themselves. They bought a real project. It was simple. It was elegant. They executed it in a simple fashion. And every time I've seen someone do that, it's been an extraordinary success. So there's that. And, our largest investment right now is a company called Mayfair Gold. And Mayfair is to us that. And I watched Atlantic Gold, and this fellow, Stephen Dean, build Atlantic Gold. And he built a 5,000 ton a day project in Nova Scotia, I believe. And it was like on a highway, on power. You're building on bedrock, flat, no real pre-strip, sitting right there. Bit of a nugget swarm. I thought the resource was sketchy at first, did more work, and I'm like, nah, I think it's kind of there. It probably works. I'm like, I can't poke any holes in this. I think this actually works, but it was small. It was like 450,000 ounces, 1.2 grams. This is built when gold was like 1,400. Okay, like, guys won't even look at 400,000 ounces at 1.2 grams today at $3,300 gold. I mean, he was building it was 1,400, and you're like, how the heck do you do that? I haven't seen someone build something that looked like that, and he builds it. And he builds it for like 120 million, 140 million CAD. And I remember calling a friend of mine, who was kind of responsible for that mine build, and asking him like, "Hey, dude, can you just connect me with the guys that built that mine? Like, I just want to understand how that happened, how you do that." And he's just like, "Oh, he's an Australian." He's like, as you guys would say, too easy, and walks through, and it's just like it's all there, man. The power's there, the road's there, the workforce is there. It's drive in, drive out. You don't need to deal with the camp. It's blah, it's a creature of just sheer elegance, simplicity. Gets it up and running, gets it trading at a valuation I couldn't believe it reached, and then he sells it to St. Barbara for like 800 million bucks or something, and I was just flabbergasted. I'm like, whoa. And then he had this backer, this guy named Ryan Beatty, and Steven and Ryan had just absolutely hit a home run there. And then I watched them go buy this other project off New Gold, Blackwater, and it looked like a good project. You're like, I mean, gold was like almost 2,000 at the time, I want to say, when they bought it. And you're like, that's a good looking project. I think that probably works. And you're like, it's pretty much further permitted. You look at it, and it kind of looked like a bigger Atlantic Gold. You're like, it's like the same flow sheet, very similar thing. It's a very similar build, actually. Needs a power line, but it's not complicated getting power there. You're like, the First Nation situation was very complex, but they navigated it, and it was also like had been well advanced by the time they got it down that path. And you're like, that doesn't look like a scary build. It just looks like a bigger version of Atlantic Gold almost. I think that's going to work. And then Steve and Ryan led from the front. They believed in their bones, and they wrote the checks from the front every single time. It was epic. Love that. And all the respect in the world for guys that do that. They say like, no, this is awesome. I believe in it. You can get behind me or you can miss out. We're driving this forward. And just taking immense risk. And now they have made an extraordinary amount of money for doing so. And look what that's re-rated to, getting that thing into production. It's remarkable. And then I watched G Mining go and buy this like thing for like it was like 100 million US. I can't remember, in Brazil. And it's a simple project, and they built it, and you're like, yeah, that's gonna work. I mean, it's not very sexy. The MPV is not huge. The resource isn't huge. It's a good little project though, and they built that good little project. And look what they've become. And I just watched that. I watched the re-rate. I watched the power of just prudence and what it does for your cost of capital and your credibility in the market is people staying within themselves and executing on simple projects smartly, but understanding that people don't understand elegance in projects and how that what people suck at is understanding joint probability. Human beings by nature really are poor at understanding two things: compounding, exponential rates of increase. They don't really understand inherently. And they don't understand joint probability. And they look at projects and they're like, yeah, it's like, I think it's like an 80% chance that that's good, 80% chance that's good. That's probably an 80% chance that's good. And you're like, oh man, yeah, this is awesome. You're like, well, cool. What's 0.8 to the power of 3? It's like less than a coin flip. Now add in a 0.9 over there and a 0.8 over there on those two factors, on those risk factors, and suddenly you've got like a 1 in 4 or 1 in 3 chance of success. And one of them rears their head, and people are like, if it just hadn't been for that. And you're like, no, dude, it's not how probability works. And so it would, when you get these elegant objects where the risk factors are so low, because like mines are just victims of joint probability. There's so many risk factors. If every risk factor's got a probability of 10, you got a problem. So you need really, really high probabilities on it across the board on all various factors, or you need huge margins of error and safety. where you can withstand a lot of bad luck. And I find mine succeed on elegance, and I find anytime people execute on those and stay within themselves, it's extraordinary. And then there's ancillary factors. I'm talking for a long time on this, but if you ever need me to speed it up, you can just kind of go
No,
like
no,
that, and
no,
I'll
keep
take the
going.
hint. But what a you know building bringing technical teams under your umbrella, like from a fun perspective. Yeah, I'd love to build an entire technical team. Expensive, you got to keep them fed. But having networks with technical people and working with people and succeeding together and working as a team, there's a lot of value in that. The learning opportunity is extraordinary. Learning, going through permitting, being involved in that, learning it, dealing with First Nations, trying to figure out how to work for mutually beneficial outcomes. Navigating the difficulties, how do you maintain positive relationships and dealing with the intensity of negotiations and making sure you get through that with mutual respect and all those types of things. Like, those are things you kind of need to go through. So there's incredible learning opportunities from it as well. There's incredible opportunities to pull certain skill sets into your network, which you can then leverage for other opportunities potentially. Um, Sharpen your pencil, and you can then apply the lessons learned from those groups elsewhere. And then, but most importantly of all, um, I think I explained this in the other interview I did that you guys were referencing, or probably touched on this. I always view companies like, I definitely talked about this, but for me, like my focus on companies is on like a decision-making matrix. I think that's the powerful thing. I think that's the most powerful thing. You just say, okay, cool. You try to figure out, okay, when you look at companies, people are generally bad, or it's difficult, or have a hard time figuring out what's a more talented team or a better structured entity than another. And so they're looking for like financial things and EPS multiples and things like this, and they think, if I can, do smart accounting, I can figure it out. Maybe you can, but it's all worthless unless you can see through the numbers and see talent or see brilliance. And because at the end of the day, it's like, you take it to something where people obviously understand sports. I remember watching this quote from Roger Federer, and these things are obviously kind of cliche and lame, but this one actually kind of got me. He was talking about like the percentage of points he'd won in his career. And it was like just above 50. And you're like, that is incredible. But everyone
52,
understands.
52, I think.
Yeah. But you put Roger Federer, you got to realize he's playing most of his points against like competition that he's never going to lose to, right? He only really faces a challenge when he gets to the finals. And so through these dominant runs, you understand that the other opponent has a 0% chance basically against this guy, even though that's because of that teeny margin. And that's the power. But the thing is, there's so many shots and so many points. There's such a robust and deep sample size that the power of a slight edge in efficiency over a relevant sample size is extraordinary. And look at the best golfers in the world. We're in awe of Scotty Scheffler right now for what he's doing. Like, it's amazing. It's one shot around. It's one chip that he doesn't hit a little off around. That's the edge they're grinding for. It's amazing that he wins by 3 strokes in a major. Like, why is that amazing? Because it's that hard. The margins are that thin. And we understand that when we look at sports, we understand the inevitability of these marginal advantages with relevant sample sizes. We don't understand it with companies typically in investing. And people have a hard time saying, well, how do I get to that? How do I see that? And it's tough. And things play out over many years, and management's changing and all that. So culture, understanding to spot a culture that's dominant, decision-making matrix that's dominant. And so, it's like everyone understands, it's like Formula One cars. Okay. This would be a good example, I think. I think you watch F1 and you say, if you gave investors, and their job was to go analyze F1 cars and put them on a comp sheet and predict winners and losers, they'd have a really hard time knowing nothing. They'd say these are identical objects. You watch F1, you say that car has no chance. That has no chance. That has no chance because that one corners better over here in this. And like over the course of, just give them 100 turns. Like it's gonna be like 1,000 turns in the race. Give them 100, like they're gonna be, long gone. And companies are like that. If you pull away a little bit with every decision, it doesn't matter if you have a better asset. You're starting, we understand you can put like the McLaren car of yesteryear, you can give it a 1 lap lead over the Red Bull, and you think, oh my God, that's cheap. Well, no, I mean, we all understand that the Red Bull is going to dominate them and pass them by lap 10. The same thing happens in companies. So, anyways, that's a very long-winded way of saying, I think mining is a very fertile place for good decision making. And I think it's inherently structured so that people and companies have a hard time employing good decision making. I was just talking to like my neighbor about it, and he works for some large company. I was like, "Oh, how big's like your team?" And I remember you told me the number. I was like, "Oh my God, that's a lot of people." You're like, "God, that's a big bureaucratic entity." I was shocked. It was like 5 times bigger than what I thought it would be. Holy crow, that's a lot of people, a lot of committees, a lot of things. He's telling me the size of like their ESG department and like the power of it. I'm like, whoa. But I I think there's a huge opportunity in mining and in gold, actually, especially in gold, for a nimble entity that makes good decisions and aggressive decisions to take the strategy, we generally employed in investing in the sector and apply it to a company, or find individuals that share that philosophy and have them apply it to the company and support them. And I think that can yield extraordinary success for a number of reasons. I think the industry is perfectly set up for it. I think gold's special in that regard. There was my brother told me this one time, and again, this is one of these things that always stuck with me, and I thought was really simple but very profound, which was he's like everyone's been on the copper thesis forever, my entire career, the supply demand thesis. And he's like, he was kind of like, who cares, man? And it's a really good thesis, and I was interested in it. I couldn't ever get confidence. I don't really make macro bets. Um, Again, solving the world's hard. It's a lot easier to solve companies and drill holes. But he's just like, how many bull markets have you seen, Darren? And I'm like, well, 0. I've heard of one though, the China super cycle. And he's like, how many bull markets in gold have you seen? Moments of like exuberance, euphoria, and capital flowing in and all this. And I was just like, I've seen a bunch of them. Even though not much had happened in gold or for a lot of those periods of times where they formed, but you got these pulses. And it's just like gold makes bull markets more frequently and more violently than anything else. And it's because it's not driven by these big industrial things. It's driven by like central banks. It's driven by global conflict. It's driven by, people trying to run away from the U.S. reserve currency, shift assets out of the SWIFT banking system. Who knows what? It's just, and the world is such a violent, volatile place. There's always some major conflict, major strife, like how many things have you seen in the last 10 years? Like major global events have just been jarring. And it just, that's when it's driven by that, the frequency of those markets and the capital flows come faster. The ground is shaking more frequently. And I always thought that was a brilliant thought. And I was like, kind of just was like, yeah, holy crow, why would I focus on anything else? And so I think and on top of that, you look at copper, people are fascinated with copper. There's just not that many ways to play it. There's so many gold companies. And there's gold companies from like very small scale, micro scale, teeny heap leaches, small projects, to medium size, bigger medium size, small medium size, large size, super size, jurisdictions, the range of jurisdictions, the breadth of jurisdictions, the breadth of scale, the breadth of market caps, you name it. The playing field is diverse. The ground is shaking. The money's coming and going and faster. That's where opportunity is. That's where if you're, and I've always believed that when you have that type of a landscape, it kind of hit me. I'm like, man, in that landscape, how much value is there in just being an object of stability? if you know that other people are going to get washed out frequently, and so much of the money is pro-cyclical and is forced to be largely deployed all the time, like the washouts are going to be brutal, and you're going to be able to buy things on fire sale. So you should always sit in a decent position of cash. And like, how much value is there in being in a position of strength when other people are in a position of weakness, knowing those positions of weakness and strength come and oscillate back and forth so fast, and it seemed immense. And so, that was my dominant philosophies in investing in the sector, was to do that. Always structure yourself so you will always be in a position of strength to the best of your ability. I mean, there's no always in anything, but when others are in a position of weakness, and have the confidence to move in those moments. And it's never, the bottom's not usually obvious. There's only one time in my entire career I've seen a moment where I couldn't believe. I was like, there's no way you don't make money buying this. Like, I remember in COVID seeing some things that were like royalties on potash trading at a few X cash flow or things like that. And you're like, okay, that's a freebie. That's just structural. Like, just buy. Thank God I had some liquidity, to buy some of those things. But yeah. And so that's the gold landscape. And I'm just like, well, I play from the investment side. That's great. But man, what could you do if you're a company? Think of all the different ways and the more diverse ways you could play the field. And if you can just go and build a company that has an incredible culture and decision making, you can set the culture of the company. You can create a culture where people lay information unfiltered on the table and surrounded by a bunch of extremely bright people who then digest it and try to make rational decisions. And one of my mottos for investing in the sector is, on the front foot and terrified all the time. You're scared constantly investing in the sector, and you're crazy if you're not. You should be thinking about risk every night you go to bed, and honestly, you can't help it if you're paying attention. But you can never let it put you on the back foot. It's you have to be aggressive to be successful, but you have to be very, very fearful at the same time. A company that reflects that thinks like that has a bunch of really bright, talented people, that's ethically aligned, that who are generally incorruptible, and who don't, like one cancer I see in companies all the time is guys go and they don't want to talk about their losses. They only want to talk about their wins, the meetings that went well, the conversations that led to something. They don't want to talk about the conversation they had with whomever that they screwed up and they burned a bridge. And the problem is when you start getting filtered information on the table, you don't know it's filtered and what you're missing. You start making decisions around bad information. It's not that useful. So having a small room of really bright, talented, aligned, ethical human beings of that mentality, and having an object to play the field in that way, I think you could achieve extraordinary things. And I think that you could, I don't know the insides of a bunch of companies. There's a few I could probably name that I think reflect that to some extent, and I think they've done some brilliant moves and brilliant things. I think there's a huge opportunity for that, and I think there's room for more. And I would love to see that through. I believe in that thesis about as much as anything I've ever believed in my career. And so that's a very long-winded answer to what you asked, but I think those are the primary facets. And for us, we believe Mayfair represents that. And, there's a whole story there and a reason why. There was a reason why the market didn't like it. It was very obvious. And then we watched things change, and in a very meaningful way. And it's one of those objects of elegance. It doesn't jump off the page at people, but it's the coalescence of elegant factors make it extraordinary in our mind. And yeah, so that's our focus through that company, is to hopefully build something that reflects that. It's not our company. We are the largest shareholder, but it's not our company. So, at the same time, you still have to build a company. You can't force it, but you can hopefully guide it and steer it.
That rationale of creating a sort of network of super switched on people, just getting to integrate and work closely with people from different fields, and getting the experience from permitting and all those various sort of facets must come back with a lot of sort of spades as an investor as well. So yeah, that really resonates. Appreciate you massively sharing your time, Darren, and hearing about your thinking in in every single facet of what you do. Really enjoyed this conversation.
Well, thank you. Appreciate that. Thanks for having me.
Thanks so much, mate.
Mate, that was a fantastic conversation. So stoked to share that one. And a massive thank you to our fantastic partners, Grounded, Sandvik Ground Support, and Cross Boundary Energy.
Hoodaroo.
Hoodaroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.